Imagine this. A startup that you've been hearing about, working silently for years, suddenly opens its doors to the world, inviting you to own a part of its future. This is the magic of an initial public offering or IPO. In this video, we're going to dive into the world of IPOs, how companies raise money, and how you, as an investor, can grab a piece of the action. Stay tuned for tips and steps to help you ride the IPO wave. An IPO is when a private company offers its shares to the public for the very first time. Think of it as a company throwing a grand opening party where everyone is invited to buy a ticket for future success. Raising funds. Let's say there's a growing tech startup that wants to expand, build new products, and maybe go global. To do all this, they need more money. So instead of borrowing from a bank, they decide to go public. By offering shares to the public, they raise funds without increasing debt. For the company, it's like getting a giant piggy bank filled with investor money. And for you, it's a chance to own a part of a potential success story. Step-by-step process of applying for an IPO. Now that you know why companies launch IPOs, let's talk about how you can participate in one. Choose a broker. First, you'll need a demat and trading account with a broker. Think of this as getting your ticket to the IPO party. Check IPO details. Do your research. Every IPO has a document called a prospectus, which gives you all the juicy details about the company, what it does, how it's performing, and why it's raising money. Make sure you understand the company's goals and financials. Apply using A. In India, you can apply through a application supported by blocked amount. What this means is that the money you're bidding will be temporarily blocked in your bank account until the shares are allotted. Wait for allotment. If the IPO is popular and oversubscribed, you might not get all the shares you applied for, but if you're lucky, your investment will soon show up in your demat account. Listing day. Once the shares are listed on the stock exchange, you can trade them like any other stock. Some investors choose to sell on listing day for quick gains, while others may hold on for long-term growth. Book building and allotment. Picture this. During an IPO, institutional investors like big mutual funds and retail investors like you and me are all bidding to buy shares. This is called book building, and based on demand, the company finalizes the IPO price. If more people want the stock, the price might go up before the listing. If you applied for the IPO and it's oversubscribed, imagine being in a lottery. You may not get all the shares you want, but if you do, those shares might hit the market at a much higher price on listing day. That's the thrill of IPO investing. What to look for when investing in an IPO. Before you dive headfirst into an IPO, remember that not all are winners. Here are some things to keep in mind. Company's financials. Dig deep into the numbers. Does the company have steady profits? How much debt does it carry? The financial health of the company will tell you whether this is a long-term player. Valuation. Check if the IPO price matches the company's actual value. Sometimes, IPOs can be overpriced, and you wouldn't want to pay more than it's worth. Industry growth. Is the company in a growing industry? For example, tech, renewable energy, and pharmaceuticals often have strong future potential. Do the leaders have a solid track record? Great leadership can make or break a company's future. Use of funds. How will the company use the money raised from the IPO? Are they using it for growth, expansion, or simply paying off debt? Companies with clear growth plans are often safer bets. Post-IPO growth. Consider a company like Zomato. Its IPO generated a lot of buzz because of the rapid growth in food delivery during the pandemic. Investors were excited because they believed in the future of the industry. Early investors in such companies often benefit if the company's sector continues to grow. Closing remarks. So there you have it. IPOs are a thrilling way to invest, offering the potential to be part of a company's growth story right from the beginning. But remember, it's not just about the hype. Do your research. Look at the company's fundamentals and understand the risks before jumping in. IPOs are your ticket to potentially significant gains, but as with any investment, make sure you choose wisely. Are you ready to explore the next IPO opportunity?